Well, welcome everyone to this month's Education Center Live hosted by Ready Price. My name is Alex George. I'm the head of marketing here at Ready Price, coming from a very snowy North Lake Tahoe. I wanted to say thank you to everyone for joining today. This month's webinar is going to be our CEO, Rick Suklis, joined by Tom Davis and Paul Jones of FGMC. And we're going to be diving into the world of non-Del. I mean, not non-Del, sorry, non-QM loans and kind of what's happening out there today. So with that, I will hand it off to Rick and get myself off the screen. Thanks, guys.
Perfect. Hey, thanks, Alex. I really love the EC Live series, and today this is going to be really special. We've got a great group. If you're not familiar with First Guarantee Mortgage, you really need to be. As the market begins to shift and you start to think about non-QM, you know, these guys partner with PIMCO, who are the largest holders of non-QM securities. And we have Tom on the phone today, Davis and Paul Jones with us to talk about really three big items today about the non-QM space. But first, let me do a quick intro. Tom is the head of TPO at First Guarantee Mortgage. So everything that has to do with third-party originations runs through and reports up to Tom, and he's been, steering the ship there for the last 6 years through tremendous growth and tremendous market shifts and market changes. We're going to talk a little bit about that. Paul's a 25-year veteran, comes out of a PHH background, product dev, a lot of underwriting and structured deals, so really knows the nuts and bolts, of how to put loans together. So we got two super seasoned vets that are working every day, in non-QM. And really today we're going to cover three things. I'm going to punt this over to Tom in just a second, but we're really going to look at a couple of different things. One, our market's starting to shift. I want to open up and talk about that first. Then we're going to get into some of the specific products that are offered in non-QM space and how to apply those. And then finally, how do you use that knowledge and that information and that training that hopefully you'll engage with the folks at First Guarantee to do to leverage your business and get more deals, which is really what it's all about. How do I broaden my net? Because Tom, there's something changing in the world, right? We have a situation here where there's some predictions about the market. I'd like you to talk about that a little bit. What's going to happen with the overall market? What do you think is going to happen with non-QM? Just sort of lay the foundation as an introduction here to our broader discussion, if you wouldn't mind.
Sure. Thanks, Tom. Thanks for the intro, Rick. I appreciate it. And looking forward today to partnering with you, your group, and Paul, and really just educating the market on the immense growth and opportunity that we see in the market in a contracting business cycle, right? In a contracting market. So if you look at the mortgage market in 2022, we should end close to high 3 trillion, close to 4 trillion, right? In Q1 of 2021, over 70% of the production, right, was refinance transactions. In Q4, the market is going to be around 26%. So just in this year alone, the refinance market is going from 76 or 70, low 70% of the overall market to Q4, let's call it 26%. So major change. We have higher interest rates. The Fed's, is tapering. So we, all forecasts, including the MBAs and a lot of, economic forecasts, the Fannie and Freddie's forecast is calling for a year, next year, 2022, where we're going to see further, origination. Market is going to slow down. In fact, the Mortgage Bankers Association is forecasting the market to hit about 2.3 trillion. So we're going to go from a market that has a size close to 4 trillion, and the MBA is forecasting it to go to a 2.3 trillion. So that's a major year-over-year decline in production. And the refinance market is expected to decrease to about 860 billion year over year, which equates to about a 62% year over year decrease in refinance transactions. So imagine a small broker that maybe is doing 5 refinance transactions a month, right? That that they might only get 2 refinance deals next year, or the shop that's doing 10 right? They will only do 4, and the lender or a large shop that's doing 100 refinance transactions on a monthly basis. Next year, that might only equate to only 40 transactions. So originators are going to have to fill that void in the space, the largest space where you're going to see the biggest upside, and you're seeing it is the non-QM space, private label space.
So the mega theme behind what's happening in the market here, Tom, is, hey, the market may be shrinking for what we've been eating, right, if you will, but there's something else over here that's really good, that if you get really good at it, you don't have to be a dinosaur, right? Just learn how to eat something different, and that's what we're here to talk about. And I think
that's right.
No, I think you touched on one other thing real quick, Tom, just to along that thought. And then, you talked a little bit about tapering. So if I'm an originator and I'm trying to gauge what's happening and how things will slow down, the tapering is really when the Fed quits buying as many of those mortgage-backed securities every month, which will then cause a more of a need for higher yield in order to get buyers to step into that market, which will push up conventional financing rates. And at the end of the taper period, which could be 8 months, it could be a year and a half. At the end of that period, we could even see, the discount rate begin to rise. So there's 2 headwinds coming for rates. 1, the end of taper, and then 2, will the Fed need to, move rates up? Neither of those have to do with non-QM, but just keep your eye on that, folks. It's a very important thing that Tom just cued on there to try to gauge where the market is moving to. But let's get back into that non-QM piece.
Yeah, sure. So the market's slowing down, right? So how do you fill that void? Over the last 10 years, everything was going GSE, right? And so I'm happy to report that the private label securitization market in 2021, so this year is going to be the highest market, the largest market, securitization market. What I mean by private label is non-GSE, so private securities. A recent Kroll bond rating agency is forecasting the year to hit about, let's call it about 100 billion. And that is what is being securitized. That does not include what is being held for sale. So a lot of these REITs, portfolio lenders, banks, they'll hold loans and not securitize them, right? So what's just being securitized is about 100 billion this year. And of that, about 25 to 30 billion will be non-QM. The market is expected to grow to 40 to 50 billion, so a 2x growth year over year. And once again, that only includes what's the securitization market. That does not include what loans are held for sale. So, go ahead, Rick. I think you had a.
I just a quick add on that, because that's just a ton of information that everybody needs to understand when we talk about the QM and the securitization market. What the difference is, what makes a non-QM are those securities and the investors that come directly in to buy those securities. And what you're saying is the investors are going to move more and more into this non-QM market, buying those assets as the market is more stable and interest rates will begin to rise, the demand will go down, and they're really going to look somewhere else for one, a little bit more yield, and really just to get the flow, I think is the big thing that you're saying is I've got to put assets on my balance sheet. If I'm a big insurance company, like a PIMCO, I need things that are going to bring yield in. So that's huge upside.
Right. And so the market is huge, right? So we expect it to grow in a massive way. We're seeing it ourselves. Our production is growing massively month over month. We're in the business of hiring next year and training our clients. I would say close to 30% of our clients are actually active. And I would say the majority of the clients next year are going to have to adopt these products in order to compete, in order to recruit, and in order to serve more borrowers. Because if you're just doing GSE production next year, you're going to be at a competitive advantage, is the thesis and where we're going with this.
Well, I think you're spot on. It's a perfect time for us to pull Paul Jones into the conversation here, because in the introduction, Paul has really got a ton of background in underwriting structured deals, how to make that work. And I know that he has, some pillars that he wants to address on what we do at First Guarantee and some of the acquisition strategies around the non-QM market. So Paul, I want to ping it to you on the background of what Tom just said and say, hey, let's get a little specific around the market. So generally, growing market, lots of appetite. You can go over here and work your way through as an originator as if the market didn't even slow down. How do we do that?
Yeah, no, thank you, Rick, for having me on the call, and I appreciate everyone's time today. This is a fun kind of product to be out there in the market with, if you ask me personally. The number one thing we get to do with these products is interact more with our clients than we ever could with your traditional offerings. And that's the first thing I really think, fundamentally, no matter how you're approaching your business, no matter what your strategy is, one, start with a strategy, right? Come in with a strategy, have a concept around how you want to grow this market. But if you're not a dialed in expert in these products, you're going to struggle, right? And who's going to help you become an expert? FGMC and our Maverick Solutions training group that's part of business development. So one of the things I learned from day one of non-QM was you have to understand the product, you have to train, you have to kind of have the will to have that skill. And once you put yourself into that situation and you're learning and reading your guidelines, you're making a few mistakes on deals. Let's be honest here. These loans are not underwritten by an AUS system. We don't read findings, and the borrowers are unique. So we put a heavy emphasis, not just for our clients and prospective clients, but also for our own sales team around training. Tom and his group, we sit down every Friday with them and we talk about successes and wins and sharing ideas, because the knowledge transference is what leads to people becoming true experts and sales professionals with non-QM. The 4 pillars you mentioned, Rick, the number one thing I've seen in the 6 years I've done non-QM, and I would bet anything with anyone on this call, the first time someone touches a non-QM loan, it's usually to fix a broken loan. It's usually a way to take a turn down and turn it into a closing. No one knew the problems were there until they looked under the hood, and now there's some way they want to keep the engine running. So that's what non-QM does. It takes that deal and turns it into a closing. A broken loan can become a really strong loan with non-QM. So that's the number one thing that we look for. The other side of that is, what can you do with a non-QM product? A lot of people have an idea of what non-QM is, but the things that we have with non-QM that you won't find anywhere else are 1099 only income, 12 and 24 month bank statement for self-employed customers, which we all see the self-employed market grew at a time when unemployment levels were really challenged, right? Because most people said, I'd rather work for myself than worry if my job's going to open, close, I'm going to lose my job at a restaurant. I'll start, making tamales out of a food truck myself, right? So, I'll drive Uber because everyone needs to get around. These things became part of the last year and a half, especially for self-employed borrowers. The notion of owning real estate, it became a big part of what people realized with the growth of opportunity. So people started buying investment properties or refinancing their current portfolio. We teach them how to work with cash flow and debt service coverage where you don't even need personal income to qualify. Does the property earn enough in monthly rent to cover that mortgage payment? Then yes, you're in the door. These are concepts that you won't find outside of non-QM. The third pillar is really that realtor relationship. And I think, it got really easy to do, originate loans and create production in the last year and a half, right? So you found out that realtors weren't getting as engaged, right? They were not hearing from the loan officers as much. So the thing that we like to do at FGMC with Maverick Solution is strengthen the relationship with the realtor. If we can get in front of a group of realtors on behalf of anyone that originates non-QM, we will do that. We will take off our badges, we'll leave these nice FGMC shirts behind. We will leave our business cards in the car, and we'll get in front of a group of Keller Williams, or pick your real estate office that you want to get in front of as an originator, and we will present on behalf of that originator. So they don't have to worry, am I good at presenting? Am I saying the right talking points? Am I, can I answer the questions if they come from the realtors? We're there. We're there with them. We're partnering with them. So that's invaluable in a purchase environment that Tom mentioned we're moving into with the numbers he gave us earlier. And the last thing, which I think brings everything full circle with non-QM, is the ability to get business from referral partners that you've never considered before. Bank statement customers work with CPAs and tax preparers. They get every single write-off you can imagine, and then they take that tax return to go get a mortgage, and they can't afford the shed in the backyard, right? Let alone the actual house, right? So when you take a look at a CPA or tax preparer, they're the hero until that moment occurs. So if loan officers will work with the CPAs and tax preparers or other financial planners, we have a breadth of opportunity to help them maintain their client relationships while helping other people get mortgages that they don't even know about.
Yeah.
Financial planners, wealth managers, right? These are people who are working with people with tons of money sitting in the bank. We have an asset utilization feature that allows you to qualify without ever liquidating any of the funds in your assets. We treat it as income. And now you can go out and do a purchase transaction or a cash out transaction. And if the person does a cash out transaction, they can put that money right back into their financial advisor's wallet, right? By putting some of that into their investments.
Yeah.
So it's things that people don't normally think about. The last thing I'll say with that whole idea of expanding the referral base is real estate investors meet every single night around the country to talk about how to buy their next investment property. If you can take one product that FGMC offers, which is our debt service coverage product called the Visionary product, and get in front of a group of real estate investors, and I have the tools and the websites and resources to get them in front of there. The great thing about real estate investors right now, right, if you think about it, all of them are holding multiple properties or buying more, and sometimes more than one. So if you're thinking about next year going, how am I ever going to get my units at the level I had before, because there's only so many refinance borrowers, there's only so much inventory for purchases of, you can only buy one primary residence at a time, right?
If I can pivot for a moment. So we kind of went the market, we sort of looked at these, pillars, and I love the way you put that. Do you have the will for the skill? Right? Are you actually willing to get in there? And then Tom, addressing that, right? What can we do to help our originators in the realtor acquisition and with product knowledge from a sales side? So you got this big problem coming your way. You've got a solution that Paul just described. How do we apply the sales piece to that? And then I want to really specifically get into some of the product solutions that you have up and down the spectrum of non-QM.
Right. Just when you look at the non-QM space, right, a lot of folks, the reason they shy away from it is because they're not familiar with the product. They've been used to just doing conventional and government, right? So I think, what we've seen, we're doing over 100 training calls. We probably talked to thousands of our customers and loan officers and branches around the world. And one of the a couple of common misconceptions are, I don't have non-QM borrowers in my market. Or the other misconception is this is for our loans or for borrowers that, have bad credit, et cetera, right? Well, there are loans and there's borrowers and non-QM borrowers in every town in the United States. When I look at my lock report, I get non-QM loans from Idaho, Wyoming, some very rural areas to large metropolitan areas, high net worth areas, right? So you have investors, you have real estate investors, you have high net worth folks, high income earners, all credit event borrowers because of COVID, whether it's forbearance, short sale, mortgage rates. You have all these people all over the United States, right? So the next question is, well, how do you serve them, right? And what are the products, to serve those borrowers, and how do you do that, right? So what we do is we spend time and partner with our clients and take a very, very strategic approach when working with them and help them build out a plan to help them create awareness with their sales folks and their operational folks, and then their referral partners. So on the non-QM side, what we see is, as we work with the client and we partner with them and we go deep and we train their folks, and it's not just one training call, right? If you think about any profession, a pro or a market expert, whether it's sports, right, baseball or golf or basketball, or if you're a business executive, right, in order to be deemed a pro or an expert, the masters of their trade go through a lot of training, right? And it's ongoing training. So we believe in that. And we work with our clients to make them experts in their market, because once they become experts, it allows them to penetrate relationships that they never had, right?
So Tom,
go ahead.
I was just going to say, so if I'm an originator today and I'm on this call, and
Right.
I am a customer of FGMC, I
Right.
can pick up the phone, call my rep, and start scheduling training, understanding, looking at marketing materials, looking at strategies to go after realtors. I can be proactive today. And if I'm not approved with FGMC, I can pick up the phone and I can call, or
Right.
I can email, or I could go to the website and I could get in contact, and you'll put somebody together with me right now and
That's right.
figure out what we can do together.
Right. So Rick, look, there's probably, if you just look at in lenders today or brokers today,
Yeah.
there's probably, let's say a large lender that has 30 investors. In that product or that investor set, there's a ton of product that a lot of folks aren't even utilizing because the LOs haven't spent the time to train, whether there's not a training department or they just don't want to learn, right? So, we could talk about just normal GSE manufactured housing, renovation products. Now, when you take it to the next level, non-QM, a different skill set is needed. And if you don't know your products, whether it's an account executive or it's a leader, or whether it's a loan officer or broker talking to a realtor, that realtor will sniff you out and they will never work with you. They'll work with the person that knows the product and inside and out because they're the market expert and they're the pro. So not knowing your product will get you into trouble. Knowing your product and mastering the product and becoming an industry expert will never get you in trouble. So that we believe in that philosophy on the sales side on our team. And what we try to do is be known in the market as industry experts for our expertise, knowledge, focus. But where we go above and beyond is our resources. So we're not just going to give you a product, but we're going to give you a ton of resources that will help you and help your referral sources, do more production. And I'll let Paul talk about that.
And gentlemen, how many account executives are there across the country right now waiting for, somebody on this call to put in the chat box, I need some help. I'm in Wichita, Kansas. I mean, are there 100 reps? Are there 50 reps? How many are there?
So we have two groups. We have the correspondent platform where we have, let's call it close to 14 account executives. And we have an inside team who works in tandem with the account executive to help on the training side and the structuring the deal side. So we have a correspondent group. And then on the wholesale side, right, then we have about 40. We're looking to grow that group. Actually, we see immense opportunity on both sides, but we're looking to grow that group to probably 80. So we're looking to probably hire an additional 30 or 40 in the next 6 months to give you an idea.
That's a huge number of folks, both out in the field and sitting in a call center or a centralized location, waiting to help those brokers. That's really, really good. Paul?
And what I'll add, Tom was talking about the resources, right? If you take a look at this whole opportunity, no one person can take a non-QM and do it by themselves, right? It just, you want to always kind of follow my adage, which I use with non-QM, which is measure twice and cut once. So if you know you have a deal, we have a technology platform that's not quite an AUS, but allows you to assess whether or not you have a loan up front. Beyond that, let's just imagine a bank statement customer, right? He hands a loan officer 24 months of bank statements that are about 10 pages a piece. Do we want that loan officer to calculate that income? No. We want to be able to take that to a secure location, calculate the income, and do it fast. So we have a structure desk that has a portal where you can upload those bank statements, and we have AI technology and a live person that will turn around and calculate the income according to our formulas from anywhere from 40 minutes to 2 hours. And that's the income they will have certainty with when it goes to underwriting. And that's the income the underwriter will use. And we're looking for red flags like large deposits and NSFs and things that you should be careful with when you're going bank statements. But most importantly, certainty, right? The certainty of knowing that loan's going to work. And guess what? We'll do that on a pre-purchase. So talking about realtors, now the realtor doesn't have to worry that the guy who thought he only made $12,000 a month actually makes $100,000 a month, and he's shopping around for a bigger house that he knows he can actually buy. Credit. Tom mentioned we have some lower credit boxes we will consider, but we're not giving the store away. So we're not going to let someone do a credit transaction where they don't have trade lines still. So you might be one day out of a Chapter 13 bankruptcy, or say you had a recent foreclosure on your, account, we're going to still see trade lines. We're going to grade the credit like they did in the old days, right? You had a credit grade. We do that. But again, do I want a loan officer to waste his time spinning his wheels and hoping it's going to work? No. Send over the credit report and let our structure desk give you a credit grade. Now you know you have a champion versus an achiever. You thought you were going to achiever because of a situation you saw, and we were able to give you a better deal because we looked at the credit from our perspective.
Well,
We love the chance,
What a great natural time to switch into product from both the structure side, Paul, and also from the sales side, Tom. You've got a very well laid out non-QM menu, right? Starting with, Jumbo Prime, which is also non-QM, right? But you've laid it out into various categories with your Trailblazer, your Champion, your Achiever, your Visionary. Can you walk down through that, Paul? Kind of tell people what's in each one of those buckets. And then Tom, how would you sell those products, or what market would those be for? And kind of ham and egg those all the way through the menu, because you have such a broad menu. I'd like to spend some time there.
So yeah, Rick, what's interesting, Tom, I'll jump in first here. The great thing about our product lineup is there's only 3, all right? And they serve the different types of customers you will find in non-QM all over the place. We have a champion product, which really encompasses a lot for the really well-qualified borrower who just needs a little bit of help because he's going bank statements, or he is a 1099 only borrower, or he's got a ton of money in the bank but no regular monthly income, things like that. But that customer has credit depth, they have money, they have reserves. And I have, from a true story here, a real life anecdote from just this week, from vacation a couple of weeks ago. Didn't want to talk non-QM, didn't want to talk mortgages, but someone started asking me what I did while I was on a sailing venture. And the short answer was he was looking for a home and was told no by a broker, and he lost a beautiful house in Chicago. He makes $100,000 a month as an IT provider for medical companies. And guess what? The broker, the loan officer, didn't know about non-QM and lost the house. Well, guess what? Just this week, we brought that deal to us. He's easily able to qualify, and just by conversation, luck, right? There was a non-QM borrower that was out there, and he's a very well-qualified person who's now got a pre-call letter from us.
Save that broker's life.
But the other thing I'll say is that champion product is a prime customer. So we have the champion, and then we mentioned, some of those lower credit scores, right, that are out there. We do help customers who have had life happen, right? Life happens to us all, some more than others. And when you have a credit challenge, or you have some turmoil that's short term, we don't want to see borrowers get turned away and not lose the opportunity. So we have the Achiever product, which will go down to a 560 credit score. And before anyone on the call says, "Hey, guess what? We don't do subprime. This is subprime." This is not subprime. If you want to go down that low on a credit score with the Achiever product with FGMC, you need 35% down. But guess what? There are borrowers who have 35% down and just a recent credit challenge. We've all been through the last 2 years of hell, right? And we all know that there's changes in life circumstances and everything else. We want to help those borrowers, but we still do it very judiciously with that Achiever product. Both of those products start at 50,000, and then they go all the way up to 3 million. A lot of misconceptions around non-QM is these are jumbo loans. Well, no, they're agency fallout loans. They're loans you can pursue not knowing exactly what the borrower is going to be able to qualify for. And you have jumbo customers who can't use the more traditional lending opportunity, who would maybe go bank statements, who's self-employed. Primary residence, second homes, and investment properties are all considered. And then lastly, the investor market. I love this market. What I mentioned earlier is being able to get out in front of people and not worrying about the personal income to qualify, but how much does the property generate in income? Why not go out there and meet real estate investors while you're, working your way through the holidays? Set up a game plan for yourself. Find where the real estate investors are meeting. All these guys understand cash flow. For some of you on this call, they might understand cash flow better than you, which is why you need to sign up for training with us so you can get out there and get the word out. But cash flow on investment properties, 80 LTV, no MI on any of the non-QM products, but also gifts are allowed under these products with 5% of your own funds into the transaction. Lower FICO customers, as I mentioned, are welcome. And we're really just trying to put common sense into these loans. So one of the last things I'll say about these products, where you're going to see grids and grades and all these things, right? But we make exceptions on these loans as well. We have an exception process. And if a loan is short on FICO or a little extended on DTI, we'll make those deals work. We have some parameters around that and some metrics that we manage every month. We look at those exceptions. And I would say greater than 50% of the exceptions submitted every month we approve.
Wow.
So we don't want to hear you say no. Leave it to us. And if we have to say no, we'll find a solution. But you know, it's just a great way to approach this market going into 2022 with opportunity and flexibility, and that's what non-QM will give you.
That's fantastic. You know, with those segmented into different buckets where you can look at credit grade and then the products within them, really a great way, makes it really easy for the originator. You know, all of this, if you're an originator, basically, right, your job is to originate, which means to find more loans. And Tom, I think we got about 15 minutes left. We're going to ask some questions at the end, but I'd really like to get into taking some of this information. So I'm interested, I'm going to schedule a call. I want to get through some training. I want to understand your categories of loans. And now, how do I put that into practical application? Where do I go to find these kinds of transactions?
Yeah, sure. I mean, they're everywhere, right? So, I mean, I was coming back from a big conference in California, and the gentleman that sat next to me on the plane, he was talking about a closing. I'm like, oh, are you a real estate investor, or do you, or are you a broker, or are you a banker? He's like, oh, I'm a real estate investor. I own a cleaning supply company, but I own about 10 properties. I'm a part of a real estate investment group. And so we started talking, and I'm like, have you ever done a non-QM loan to buy your investors? Have you heard of a DSCR loan? The gentleman said no. So we on the flight home, I was just talking to this guy. I picked up 4 deals. Now I don't originate, but I called a good friend of ours that we trained through our program, through our flight school is what we call it. And so, yeah, so we train them, and then we introduced this gentleman, you know, to one of our clients, and the client did 4 loans for them. Another time I was, you know, visiting my financial planner, and my financial planner does not happen to offer mortgage products, right? And you know, everyone on this call, everyone should have a financial plan. Everyone, you know, should have a plan for 2022. Non-QM should be part of your plan and your strategy. Failure to plan is a plan to fail, right? So I was talking to my financial planner. I asked him, what do you do when a client, and a high net worth client, comes to you and says, hey, I need a mortgage. Do you offer a mortgage? What do you do with those clients? Do you refer them to Wells Fargo or Chase, knowing that if you sent them to there, they get a mortgage? What's going to happen? They're going to take, you know, those financial assets and try to go after the financial assets and give them a really low rate if they move assets, right? So I said, hey, let me introduce you to our products and a customer that we do business with in your local market. And when you have these, send them to these local 3 or 4 local folks, so that they're not going to the Chases and Wells, and now you could serve those borrowers, right? So when you think about, we're brokers, we're bankers, you know, we're all, you know, working out of, for the most part, you know, a lot of us work remotely, but if you're in an office, in that office building, right, you don't even have to leave the office building, and you could drive a ton of production through the office, right? Because guess what? In office buildings are CPAs and accountants. Tax season's right around the corner, right? Self-employed people go to those guys, and they go to those guys for what? To usually their taxes are a little bit more difficult. There's write-offs, right? So those are great opportunities for bank statement deals, right? There's financial planners in those buildings. There are attorneys in those buildings, right? There's all these different, opportunities in those buildings, and loan officers or brokers don't even have to leave the building that they're working. They could just go visit, those offices in those buildings and introduce themselves. I work in this office building. I serve all, the organization and companies here, and I do a lot of mortgages for folks here. And if you ever have anybody, I'm down at, Suite 205, send them down. I'd like to help you guys. And on top of all that, we also have white label flyers for the accountants, for the CPAs, for the highlight our products, and you could white label them so the broker could actually put their NMLS and their logo, and they could print the flyer. We provide it. They don't even have to create it. It's free. They could just go on our site. We help them, and they could just go around sharing those flyers. So once again, these loans are out everywhere. It's just, you gotta understand the product and learn the product. And when you do and you train, then it's off to the races. We see it every single day. Folks that we train, we go 2 or 3 training calls, and they work with us. After that, they go from doing 1 loan a month to 5 loans a month to 10 loans a month, and they just keep graduating, and then they become, known in their market, just like a surgeon, just like an accountant. They become known as the non-QM person in that market.
Wow. Hey, that's really, I was just making notes while you're going through that. I'm thinking, okay, CPAs, bank statement deals, because they saved you so much on your taxes. You got to use your bank statements. Lawyers, right? What it goes to lawyers? Divorce, which equals asset depletion loans, and perhaps credit, bankruptcy, or other issues that come with that.
Exactly.
And then that building is full of people who are in general business that might, want to use a DCR loan or some other way to leverage.
Check out your local chamber
Rick,
of commerce, your small business association groups. I mean, anywhere there are entrepreneurial people or entrepreneurs gather, you want to be in front of that. You don't have to be a door-to-door salesman. I'm here in downtown Philadelphia. I go to a lot of financial networking events because I like to rub elbows. I like to meet people, and it's good to, have a cocktail and talk lightly about something. And guess what? Every time I'm at those events, which is nice to get back to them, people are very curious and intrigued. And if you can turn that intrigue into success, you're halfway there. And that's all you have to do.
Rick, one other thing, I will tell you that we also provide training around sourcing, but all the stuff that Paul and I just bounced back about how to find these loans, where to go find them, who can you partner with to go after non-QM. We actually have customized training for just teaching our partners how to go find those loans. And if you think about, our great industry, we have brokers, lenders, originators all over the country, and every market is a little different. Some areas might be high net worth areas, some areas might be more credit event, larger acreage. It could be, more, higher loan amounts because you're in a local or a coastal area, vacation home, second home, right? Self-employed folks that need cash out of their home, right? So all these different areas, we'll customize the training to help them become experts in areas that they want to focus on.
Let me send that right back at you, Tom. I've heard a number of different things here, right? First, we're going to train you and we're going to provide the training materials. So as an originator, I don't need to worry about that. Technology to calculate complex income. We have it. Send us the tax return or send us the bank statement. Work with us to get that. We've got technology that'll help. Presentation. Not everybody likes to present, right? So presentation support, in going in and figuring out how to go to various groups, whether they're realtors or other places where you have an opportunity to make presentations. But I think at the top of that list is product stratification, right? What products do I market to what group of people, and how do I get a cohesive plan to get after it? Because I love when you said, no plan is a plan to fail, right? Not having a plan is planning to fail.
That's
so
right.
Your team is trained and your trainers are trained to take loan officers whose market is about to shrink and show them, here's a big piece of pie over here where 90% of originators aren't going to eat for a number of different reasons. Quit eating the purple bush, come over here and eat the red bush, and you're going to be just fine. It's just as good, right? You got to do that or go the way of the dodo bird.
That's right.
Yeah.
Yeah. The way I see it, this opportunity is in the infancy and in the major growth phase, right? So it's a huge opportunity for entrepreneurial spirited, folks to go out there and take share and grow their revenue, different revenue streams in a market that's contracting. Think about if you're a broker or you're a lender, right? A year from now, your enterprise value, if you're only doing, if let's say you're doing 50 million of only conventional, if the market's shrinking and margins are compressing, right, that value of that company is going to be worth less, right? The enterprise value versus a company that's doing, has a wider product offering, a lot more options to serve borrowers, right? And has higher revenue streams, and you're offering and you're doing higher margin non-QM production, that company is going to have a higher value. So for all the executives and C-suites, the small business owners that are brokers and lenders, those who really adapt and adopt here are going to, a year from now, are going to be ahead of everyone else in a major way. And the reason I say that is because we've been at this and building our platform, pre-COVID. So it's been about 3 years. So for a lender or an investor to get into the space that we're at, right, it's going to take a year and a half for them to build the structure desk, to get their AEs trained on their product, right? So there's a barrier of entering our space, right? And so we're visionaries. We think we're visionaries when it comes to non-QM, and we're here to support our customers and help them grow in 2022.
Boy, so true. You just don't pivot from A loans to non-QM loans. A whole different approach. It's almost, the way we did things, before everything was AUS and uploaded, and there's real thought, there's real looking at what's going on with the borrower. And to your point, there's a real need to learn your craft. So those that aren't already there, the way you guys have been for a number of years, are going to start coming out with these products, and they're going to start offering them to folks. And I think just the infrastructure that you've already got there is where people need to kind of rest their head. Tom, you want to put a bow on our conversation here?
It's the end of the year, so happy holidays to everyone. Merry Christmas to everyone. I'm super excited, super bullish about the opportunity, right? There's a market shift, and I've been in this industry for 20 years, and I've seen, 3 or 4 major market shifts. And when I saw them in front of me, I knew that there was going to be a major opportunity ahead of me. And so I just want everyone to encourage everyone to really, adopt these products, become a master of your trade, become a professional, an expert in your region. And we would love to partner with you to help you get there. And if you do, you will be rewarded by the sales gods and the mortgage gods. So thank you for your time today.
Yeah, you know what, Tom, I learned a ton today. So thank you very much. I was glad to be able to do this with you guys and learn how expansive your product offering, how expansive your training program is, how expansive your sales program is, how expansive your materials are, and that you guys are really here to help our MLOs, especially those that are on Ready Price. So we're very, very happy to have you guys today. Merry Christmas to everybody and happy holidays. And we'll catch you in the new year.
Thanks, Rick.
All right, guys. Thank you.
Good job, guys. Thanks.